You are watching News 9 Live. I'm Krishna Kumar, and as we discuss Modi's decade, we are putting the focus at this hour on how India's stock markets have flourished over the course of the last decade. Since Prime Minister Narendra Modi took office back in May 2014 for the first time, India's stock markets have seen a meteoric rise. In the past decade, the Nifty benchmark index has surged nearly 250%, delivering an impressive compounded annual growth rate, or CAGR, of nearly 13.5%, a performance unmatched by any other market in the world. As the Prime Minister turns 74 today, we reflect on how India's markets have matured under his leadership and explore whether this remarkable streak can continue in the years ahead. And joining us on the show are a couple of very special guests. We have Mr. Andrew Holland, CEO Avendus Capital, joining us. Thank you, Andrew, for taking time out to be with us. We also have Sudeep Bandyopadhyay, Group Chairman, Indie Trade Capital, also with us. Sudeep, thank you so much for being with us. But before we go to our guests, we have my colleague Suyash Maheshwari in the studio. Suyash, break this down for us. 250% is a big number. That's just for the Nifty. Give us an overview of how the markets have been as part of this incredible bull run over the last decade.
Certainly, Krishna. I mean, 250% returns over the last 10 years. And as you pointed out, that's a CAGR of almost 13.5%. I mean, in a good year for several countries, 13.5% are outstanding returns. And we have been repeating that feat for the last 10 years in a stretch. I think that is remarkable. And some of that has to do with the policies that have been brought about by the NDA government in the last 10 years. You know, the banking reforms come to mind, recapitalization of banks, the setting up of the IBC, or, you know, corporate tax cuts or schemes like Make in India, PLI. And that also is reflected in the sentiment of investors. I mean, Nifty since June 4th, the counting day has surged by about 16%, outperforming all the global peers. And you know, the asset under management of mutual fund houses, that's at a record high of about 66 lakh crore rupees. The sentiment is at a record high, and even though valuation wise we are currently looking a little bit stretched, there is a good reason for it, Krishna. I mean, I think India currently stands as a bright spot in a world that is, you know, facing different problems. Let's say US, for example, they have fears of recession, you know, running unabated. Inflation has been a problem for them. Similarly, for China, economic growth has stifled since COVID. They have not been able to recover. Several countries are struggling with inflation. And at all this while, India, inflation is coming off nicely. For the last 2 months, inflation has been below the you know, the target set by RBI. It has been below the 4% target. GDP growth has far exceeded what the, you know, global brokerages have suggested. So I think there's a good reason why India currently looks you know, expensive, and a little bit on why India looks expensive. I think there is a little bit of a, you know, bias there, because whenever we are, valuation is a relative term, right? We are measuring the current valuations against the past performance or some other country. So therein we are basically extrapolating the past growth to predict what the current valuations. And if you really believe that India is on the cusp of this economic transformation, I think valuations don't look as stretched as, you know, the numbers might suggest.
Okay, we'll take that to our special guests joining us on this broadcast, Andrew Holland and Sudeep Bandyopadhyay. Andrew, I'm going to come to you first. You know, valuations stretched, but, you know, look at the way the Indian economy has been. It's been the beacon of hope over the course of the last decade through all the global gloom and doom. And India's stock markets is emblematic of the kind of performance that the Indian economy has put up over the last decade, would you say?
No, I agree. I mean, we've gone from a, you know, $1-2 trillion economy to you know, to a $4 trillion economy, and you know, a simple way of measuring that is obviously market cap to GDP. And whilst we're running way ahead of that at the moment, if you just take a, you know, 100% of your kind of GDP, you know, that's where the stock market has risen so quickly. So I think a number of things that I mean, there's many things that Prime Minister Modi has done, and the Finance Minister in terms of reducing corporate tax, which you mentioned. But I think over the years, you know, India's quite rightly got a seat at the top table in terms of you know, the global environment and in terms of policy making. So I think that's been you know, a big highlight for me, for foreign investors, you know, particularly looking at India. And the second is, that problem companies have faced of, whilst we have, good labor, cheap labor, we can buy, machinery as cheap as anyone else. It was getting it from the factory to the port or to the warehouse, which has always been very expensive. But with all the government infrastructure that we've seen over the past, many number of years now, that's becoming very much a tailwind now for Indian manufacturers, both for local sales as well as exports. So I think that's the kind of thing that you don't touch and feel so much because you're not looking at all the highways and trains and so forth. But I mean, that's been a big advantage now for India.
All right, Sudeep, one is the money that's coming from foreign investors into the Indian market, and the other is how the Indian market has been held up so well by domestic institutional investors and the participation of the retail investors, the average individual investors, which has grown multifold in the recent past.
Oh, absolutely. I think, if I have to very briefly mention what has changed over the last decade, I think one is massive infrastructure build. Now, the infrastructure is key for the economic growth of any country, and we have focused in a big way, the government has focused in a big way on building infrastructure, whether it's roads, airports, ports, and pretty much everything else. So that's one big pocket. Second is reform of the tax structure. I think you guys touched upon the corporate tax reforms, but beyond the corporate tax reforms, I think the GST, which is indirect tax reform, I think these two have done wonders. The third is the other economic infrastructure. Now, you look at Jan Dhan, you look at Aadhaar, you look at the PLI schemes. I think all this has created an enabling a condition for growth to pick up. And on top of that, we have the external, there we have been lucky because the geopolitics have shaped up in such a manner that India has become the favored investment destination for the investors because of geopolitics as well. Now, on top of that, we have the oil prices, which very fortunately for us have been range bound and has been hovering around that $80 per barrel Brent, and that does help India in a big way. We also have been fortunate to have decent monsoon, by and large over the last decade. And I think the combination of all these factors have led to a significant growth momentum gathering pace. Now, under the circumstances, I think retail investors got the boost during the COVID because I think the other expenditure of retail or individuals got cut down. They didn't have a scope to spend, and they started investing in the market. That has proved to be a big boon for Indian markets. As you have been talking about, per month about 25,000 crore is coming to the market through SIP. On top of that, there is HNI investment, there are direct retail investment and investment through multiple other sources. So, roughly around 50,000 crore incremental money is coming from domestic source to the capital markets on a monthly basis. Now, this is a huge strength, and you're absolutely right. This has ensured that the Indian markets, in spite of global turbulence and global investors not coming to India in a big way, I think Indian markets have sustained, grown, and flourished.
Right, and Andrew, I'll come to you, Suyash. Hi. So Mr. Bandyopadhyay said GST and corporate tax cuts were the two reforms. I think he named three. Some of the biggest reforms that have helped the markets. In your mind, which is the single biggest reform that has really helped our markets in the last 10 years, which was introduced by the NDA government?
I don't think there's a single one reform you could. I mean, it's a combination of the reforms which we've highlighted, whether it be corporate tax, GST, infrastructure spending. So all of these things, I think, have really helped, galvanize the kind of economy, to an extent where, both local and foreign investors have been enthused in terms of the growth. And we've seen that through, earnings growth across many different sectors. And of course, the diversity of India and the fact that we're a big consumption market, continues to attract foreign direct investment. And I think that's the other thing that, India's done well is to say, make in India. And one of the things that I want to highlight here is that, I'm sure that a lot of boardrooms around the world are looking at a number of things. One, should we enter India? What's the story? What's the economic growth? And you're starting to see them, put either manufacturing or services companies into India. But if they just look at a number of things as well, that we've got Hyundai Motor listing fairly shortly. I suspect that its market cap in India will be something like 40 to 50% of Hyundai Motor's Korean market capitalization. And if I look at Maruti, it's probably over 100% of Suzuki's market capitalization. So you get the combination of one, you come to India, you build your business and it does very well. And if you list that company, then you're going to get a premium to your own market capitalization. And that plays out very well for a lot of companies who are listed. So, if you think back 5-10 years ago, a lot of companies who were mentioned, we're setting up shop in China, used to see their share prices moving quite significantly. I suspect that's what's going to happen very, very soon for companies that are saying that we're moving into India, because it not only gives you the growth of the Indian economy, but potentially gives you extra fillip to your own market capitalization.
All right, and Sudeep, I mean, we have given the government its laurels, but do you think we give them too much credit? How much of this growth that we have witnessed in the past 10 years do you attribute to the natural progression of the markets and not government actions per se?
Well, of course, I mean, there is a bit of, the momentum. I think momentum started building during the, erstwhile NDA government, during Atal Bihari Vajpayee's Prime Ministership, when the infrastructure got a big boost. The Golden Quadrilateral and things like that started coming and being talked about at that point of time. The UPA government, in spite of whatever we may think, I think continued the infrastructure work and lot many other reform measures. I think the momentum had been gathering pace from the early 2000s, and that with the smart and intelligent measures taken by the current government, gathered pace, and we are seeing us in this stage. The way I look at the future, I think, as Mr. Holland also was saying, that, globally, companies are looking at India as a base, setting up base in India, and that's looked upon as a positive measure, like it used to be in China maybe a decade back. Now, if this trend continues, I think we are in the right direction, and we will move to a completely different level of economic growth and economic momentum in the next decade.
All right. At this stage, Andrew, the question that's on everybody's mind is, how expensive are the Indian markets? Always talk of valuations being stretched. There was even talk of froth, quote unquote, in mid-cap and small-cap stocks in the country. Talk to us from the perspective of the sustained bull run that we've seen. Where would you rate the Indian markets? Yes, it is a new era for the Indian markets. Indian markets are not the way they are today, what they were a decade ago. But where exactly is it at this stage? Is it overvalued?
In terms of pure valuations, it is overvalued. But, it's hard to fight this tidal wave of both investors and the money they're putting into the domestic market. And a lot of the mutual funds are still 6%. So, whatever happens globally that we've seen over the past few years, India's been very resilient. It's a low beta market. So, let's say the index globally fall about 5%. We're usually half of that, right? But my worry is this, and there's two parts of the worry, which I don't think is going to be worry for domestic investors at the moment, is that earnings growth has started to slow, and we see more downgrades in the last quarter than we have seen for some time, and the government spending is yet really kind of to pick up, since they formed the government, and that's not spurring private capex at the moment. So that multiplier effect, which we were hoping for going into 2025, and the earnings upgrades, is probably just not happening. So valuations, don't justify the market kind of moving so much higher from here until we start to see some of those expenditures happen. And secondly, I've seen this before as well. We're getting a lot of thematic, funds being launched, and if anything, happens to the market for whatever reasons, it's these kind of funds which really kind of suffer, and there's a lot of money chasing them at the moment. So I just worry about the exuberance of the market, rather than I'm worried about the fundamentals of the economy over a longer term. So if we just kept where we are for 6 months or so, let earnings start to kind of pick up again, that wouldn't be a bad place to be. But the wall of money is so strong that it keeps pushing the markets higher.
All right, and Sudeep, I want to take this conversation to you as well. I mean, Andrew says that the earnings growth has sort of stifled. Private capex is still lagging, but it is picking up, right? Rural demand, which was another pain point for Indian markets, that is also coming back. So just want to understand what are some of the key drivers for the markets from here on, and what are the factors that one should be cautious about in the remaining months of 2024.
Well, a couple of things I'd like to mention, and to that argument which was being made, I think we realize that there is significant amount of money coming to the market, incremental money on a continuous basis. Now, under the circumstances, what is required for Indian market is to develop a depth, by which I mean more and more good companies should come and get listed. I think we have to encourage, that's happening, but I think the pace of that should accelerate, and that will ensure a healthy market. The logic is simple. If the X amount of money is getting spread over 100 shares, instead of that X amount of money should get spread over maybe 150 or 200 shares. Now, obviously, the valuations will start looking realistic. So we need more and more companies to get listed, and that's absolutely of paramount importance as far as the health of the Indian market is concerned. Otherwise, we will get into a situation where too much money will start chasing few stocks. That's point number one. Point number two, I think overall on the valuation subject, my view has been and will be that there are still a lot of pockets of opportunities. We have to pick up the right stocks. Yes, there is fraud. There is kind of exuberance, over exuberance in certain pockets of mid cap, small cap, and all that. But there are still long-term opportunities available in the market. We have to pick up those stocks. That's point number two. Point number three is that, I think you mentioned during the introduction that we are still looking at old yardsticks to value companies, whereas we are probably getting into a new paradigm. There's a paradigm shift happening as far as Indian economy, Indian business, and Indian companies are concerned. We are becoming global companies, global participants, and we should look at some of the companies with a different lens rather than the old way of valuing Indian companies. So I think the combination of these three should probably guide us towards the right future.
Okay. Andrew, if I were to ask you that, what do you think is the right future? Some say Indian markets are due for a correction at the levels at which they're trading right now. But as Suyash and everybody talks about over here, the economy story is intact. There's no doubt in the fact that stock markets are only going to grow from here. But do you think there will be a climb down and a climb up going forward?
There's always, liquidity-driven markets always concern me, because something does happen somewhere. I'm not saying it's within India, it could be anywhere in globally. It could be after the elections in the US. You just don't know. But once that liquidity dries up, and I'm not saying it will, completely in India, that's when, a lot of these valuations people are going to look at again. And I think just chasing, the kind of same stocks, it doesn't pay in the end in terms of, the earnings growth that you're seeing compared to the PE that you put on it. So I'm just a little nervous. I'm not saying anything wrong with the Indian economy or the kind of growth going forward, but, I've been here before. I remember, it's a long time ago now, but I remember the kind of 87 crash when, nothing was going wrong in the world, and all of a sudden something came up out of nowhere. We all knew valuations were too high, and we had that stock market crash. So I'm not saying that's going to happen, but it will bring the markets back more to reality at some point. And I'm saying what I would hope it to be would be that earnings growth starts to catch up to the valuations that we have at the moment. But that's just not likely, given this wave of money coming into the domestic market. So I'm kind of cautiously optimistic if that's a kind of a way of looking at the markets. But I just think that at the moment, everything's going right, and there doesn't seem to be, it's like when you go to a party, right? People used to say, what are you thinking about the markets? No one even asks anymore. They're just talking about how many multi-baggers they have, and what the next kind of move should be. So that's the change, and that starts to worry me after a while.
Okay, cautiously optimistic is the word coming from Andrew Holland, CEO of Avendus Capital. Thank you, Andrew, for taking time out to be with us. And of course, Mr. Sudeep Bandopadhyay, Group Chairman, India Trade Capital. Thank you, Sudeep, for taking time out to be with us on this special show. And of course, my colleague Suyash Maheshwari as well here in the studio. Thank you, Suyash, for being with us. And with that, it's a wrap here from our side. Thank you so much for watching. This is Krishna Kumar signing off.
Fast.
My God, isn't she your daughter?
Yes.
She's playing football. This is boys' game. Make her study. If she doesn't get a good job, she will get a good match. Will you win the world by playing football?
Go! Yes, auntie. My daughter will win the world by playing football.
Let's go to Germany.
World's largest football talent hunt, News 9 Indian Tigers and Tigresses. In association with DFB Pokal, Bundesliga, BVB and India Football Center. Train and play matches in Europe. Register now and fly to Germany. IndianTigersandTigresses.com.
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
That India will get older before it gets richer may still be a concern for policymakers, and reports by private insurance players suggest that a single hospitalization can wipe out as much as 50% of a family's savings in one fell swoop. Most personal finance experts advocate for the need of health insurance coverage. India's very own Ayushman Bharat scheme, launched back in 2018, was meant to protect citizens from the ballooning healthcare expenses, especially the underprivileged. And now, in a bid to further deepen health insurance penetration in the country, particularly